Ladies and gentlemen, we are live. I am the Crypto Crow here with my esteemed guest, Elliot Kravitz. We'll be right back after this brief disclaimer, so stick around.
You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins.
What's up, everybody? We are back. We are live. I am here with my own personal tax genius, Elliot Kravitz.
Hey, how you doing today?
Everybody has been waiting. I'm seeing the chat. People have been waiting over a year for me to get you live.
Well, I've been busy, but thank you for having me on. I really appreciate it.
Now, for those that don't know, and I actually looked this up recently as well, you've been like one of the top tax guys in Cincinnati. Like Cincinnati Magazine has featured you. Like you're kind of all over known as like the tax guy, right? Like I'm not mistaken here.
No, I appreciate that. I'm thankful. It's because of people like you and my client base that support me, that give me great references, that do reviews and 5-star reviews, that have put me in a place where 4 years running I'm named one of the best tax services in Cincinnati. For the last 2 years, I've been named one of the top 100 tax professionals nationwide. And this year, I received an award as one of the top 50 accounting professionals nationwide. So I'm just very blessed.
Now, luckily for me, you've been handling my taxes now for how many years? It's
a while.
It's been a while.
I've lost track, but it's been a while.
And I've been very happy with your work because basically, my wife has taken over a lot of that stuff, and she ultimately, I send her all the data, and she's been putting things into like QuickBooks or whatever the hell it is. And,
right.
And she handles that, and she basically just sends you a bunch of stuff, and then you just kind of let us know when it's all done. And
it's like a miracle.
Yeah. and that's great. So yeah. It's been a very easy thing. Now, so 2017, obviously we had this big bull run, and everything was just golden ladders, and just everything was great for everybody for the most part. And so there are a lot of people that made a lot of money in 2017. And there are a lot of misconceptions, and I'm assuming there have still been a lot of changes still since, Trump signed this tax code or this tax law or tax bill or whatever. And so there's still so much confusion over crypto taxes, how it relates to your regular taxes, your income tax versus capital gains tax, and so forth and so on. It's such a confusing mess, and there are so many people out there that want to know a lot, but ultimately, how do things work? What makes the most sense? And I guess we could go from there, but self-directed IRAs and how those, eliminate some taxable, capital gains, and, just all the different things that we can kind of get into, but there's so much stuff to go over. I should shut up and let you start.
Oh, that's okay. Well, it does cover a wide spectrum of things. And first, let me say that any of the information that we're going to talk about today is general in nature and isn't specific to anybody's personal circumstances.
Right.
So you should always consult with your personal professional advisor or seek out one if you don't have one in order to see what applies to your personal situation. So that being said, let me say that fundamentally, the IRS has determined that the cryptocurrency is property. So as property, if you buy it and sell it and make a profit on it, that's taxable as income. Some of the complexities involved here is you can buy it and sell it, and then you can buy it from one currency to another currency, whereas using stocks as an example, you buy a stock, you sell a stock, so you've closed out that position. That's the end of a transaction. So here you can have a string of transactions that go on or appear to go on, but in reality, every step is an opening and a closing. And so just from a fundamental point of view, if I buy Bitcoin on day one and I sell it a month later and buy directly into Litecoin, let's say, as an example, I've created a taxable event right at that moment. So the challenge is determining, well, what is my cost basis? What did I pay for the Bitcoin initially? And then since it's not sold in US dollars, I have to convert it to US dollars at the date and time of the sale before it goes into the next currency. So even though it's streamlined going currency to currency, it's really, for tax purposes, not the case, in that each intermediary step creates a taxable event.
So
really,
if I buy $100 worth of Bitcoin and then a month later it's worth $150, but then I'm converting that Bitcoin to USD Tether, for example, then
okay.
I'm paying a capital gains tax on the $50 difference at the time of the transition into USD Tether.
That's correct.
Okay.
And the reason being is a lot of people struggle with the idea that, well, but I haven't really closed out till at the very end back in US dollars, and that really is a misnomer. It's the day of that transaction that you sold it, you can no longer gain in that Bitcoin account. So if Bitcoin continued to go up to 200, you wouldn't get any of that because you're now in coin 2.
Mm-hmm. Right.
Okay. So your new basis is going to be whatever you paid for coin 2 that day. That's your new cost basis for coin 2, and the $50 gain that you made on the Bitcoin is taxable as a short-term taxable gain.
Now, so that's the perfect caveat. So you say the short-term taxable gain. Now, what if I bought $100 worth of Bitcoin today, and then I held it for 1 year, and then transferred that and I bought USD Tether with it?
So if you did that, then it would be considered a long-term taxable gain, which is a lower tax rate, potentially, depending upon an individual's personal circumstances and personal tax rate.
Okay, so explain the tax rate then. What defines the tax rate? So if I have a short-term capital gains tax on that $50, what's the typical tax rate? And then how has that changed? Like, I know it gets significantly lower as a long-term.
Well, so what happens is I'm just going to pull out. So depending upon your other income, okay, in addition to what you've made in that capital gain, if it's a short-term gain, it's tacked on to your other income. So if you have $100,000 income at that point, you're going to be in a 22% tax bracket, okay? So if you add whatever profit you made on that Bitcoin that's short-term, you're going to pay 22% tax on it, or more, because if adding that gain puts you into the next bracket, then you'll pay that higher rate.
Oh, wow.
So if you're in a 35%, and let's see, yeah, so if you're in a 37 is the top, but if you're in a 35% bracket and you add your short-term capital gains, whether they're Bitcoin, stocks, or anything else, they're treated as ordinary income, and you're going to pay whatever the tax rate is on that ordinary income in that bracket that you've achieved.
So basically you're saying that somebody who makes less, just generally, so somebody that makes like 50 grand a year, is going to ultimately be in a lower capital gains tax bracket than somebody who makes $100,000 a year.
Short term.
Short term.
Short term. Yeah, because what's going to happen is the tax system is a progressive tax, which means that as your income goes up, so does the tax rate. That's why we have brackets. So the first portion of income that you make, that's...
Oh, hold on. You froze framed. He froze framed on me a little earlier in testing, but he came back, so we'll see what happens. There he goes. Here he's back. Okay.
All right. So the first bracket is 10%, and that's on $20,000, and then it goes up from there. So each time you achieve a new bracket, it's not retroactive to the first dollar you made. It's only on that portion of income within that bracket. So if the 10% bracket's up to 20, and from 20,000, and I'm just using general average numbers, not like very specific detailed ones, but to 77,000, that'd be a 12% bracket. So just that portion of income between 20 and 77 is at 12%. And then from 77 to 165, it's 22%. So just on that portion. So you see, so dependent upon your other income, that's going to determine, when it comes to short-term gains, how much tax you're going to have to pay. And of course, if you had $50,000 worth of gains, it could throw you into another tax bracket.
Is moving your crypto wallet to wallet a taxable event? I'm guessing not.
No, not wallet to wallet. As long as it's staying in the same currency, you haven't changed any. You haven't created a taxable event at that point.
So, but by the nature of this, ultimately, what this is kind of a question. I guess I'm looking for confirmation. All of these taxable events don't mean that you are paying that tax right now. You're not actually. All these taxable events are calculated over the course of the year at tax time, right? So
yeah, that is correct. So the challenge here becomes, especially for someone who's an active trader, is trying to keep track of all of that data. And if you use multiple exchanges, you've got transactions happening in more than one place, and then you've got to use the first in, first out method of calculating, okay, what did I buy first? That's what I sold first. And someone with a lot of transactions, you really need to use a tool to help make that doable, because otherwise it's just going to be overwhelming for most people.
Well, I know that when I sent you when we did my 2017 taxes, I had like 6,500 bot trades on that cointracking.io report. Right. I'm sure that was a lot of fun for you.
Well, I've got some better ways to handle that this year.
Okay, good. Yeah. So, but that a lot of people are like, what tool works well to like keep track of that stuff? I mean, I use coin tracking. I found it wasn't entirely accurate though. I thought like there were a lot of stuff on there. I'm like, this isn't mine. Like, I know I didn't do this.
Well, let's talk about first some of the things that are taxable events. Mm-hmm. So it's not just buying and selling one currency and then buying another currency and essentially closing out a position is what I'll call that. But if you have an account that has a debit card and you buy something with that debit card, on that day, you've closed out whatever amount of Bitcoin, for example, that you used to make that purchase. That's a taxable event, potentially. Could be a loss, could be a gain, whatever it is. That would have to go into that end of year calculation. So now what we're looking at is not just that we have to report it, but the IRS is starting to look to places like CoinBase to report to them the transactions that they're doing over the course of the year, in the same way a stock brokerage provides a 1099-B to its customers. Eventually, you would be getting a 1099 for the trades that you've made. So now let's say I've used 3 different exchanges, and depending upon the dates of those trades, it might be more beneficial to pair up a sale from one exchange to another. So having the ability to consolidate or aggregate all that information into one place that could then parse through or sort through all that information and determine the following 3 things. What taxable events occurred? Is it capital gain, capital loss? And do I hold money in accounts that are considered overseas and meet the threshold to be treated as an overseas account where I need to file an FBAR?
What's an FBAR?
When you have an account that's held outside of the United States, a foreign bank account, and it has more than $10,000 residing in it, you have to report to the IRS the fact that you own that account. So if some of the exchanges where, or wallets where the coins being held is out of the United States, and if there's more than 10,000 US dollars in valuation there, that needs to be reported on an FBAR.
Okay, so that's actually, so for people that's especially important for people that are, if they put, if they have 3 or 4 Bitcoin on an overseas exchange, they have to file that.
That's correct.
Well, the government wants you to file that.
Well, yeah.
I don't know how many people actually are.
Well, yeah. But well, the thing right now is that the government can't really track it yet. But one day, they know that that's their goal, is to be able to track it, and then it'll be a problem for some people. If you've got exchanges providing a 1099, that may make things definitely more complicated just from the tax filing standpoint.
Yeah, and to answer Alfonso's question, no, it's not a taxable event. If you're just moving cryptocurrency from like a CoinBase wallet to another exchange wallet, that's not a taxable event.
That is not a taxable event. That is correct.
Okay.
But if I'm selling out a position to go to another position, that's a taxable event. If I'm using the funds to purchase something, that's a taxable event. If I'm mining and I receive a coin, that's a taxable event. Whatever the value of the coin when I mined it, and because that's income, you've got to pay tax on whatever income you earn. So, and that brings me to the next area, which is if somebody pays me for my services with Bitcoin, I have to report that as part of my income and convert it into US dollars. So it gets counted just like you paid me in US dollars, or if you gave me stock, or if you gave me chickens, or whatever it is, that is reportable as income, and that's subject to income tax, Social Security tax, and Medicare tax.
Right, which is basically what I had to do,
Right.
And I have to do again for 2018. Right. Is basically whatever there was a difference between, like if I did an ICO review and I was paid in Bitcoin, that was considered income tax, not capital gains tax. Unless I were to take some of that Bitcoin and start trading it, then the difference thereon was considered a capital gains tax.
Right. That's where capital gains would potentially occur in phase 2 of that.
Right.
So I was paid in Bitcoin. That's taxable. Right. Now that establishes my basis, which means the valuation of that coin on that day. So let's say, on whatever day it is, I get a Bitcoin, and it's $3,600. That's what I claim on my income tax for that day. Not, at the end of the year, but I claim that as part of my income. Now, when I put that in my account and buy and hold that Bitcoin, $3,600 is my cost basis. If I sell it for 4,000 US dollars, I have a $400 gain to report in that scenario.
And that kind of goes to Nasty J. are you taxed just for selling it, or is it only net profit or loss? And basically, that's kind of what you just answered, I think.
Yeah, it's net profit or loss. So it's not the whole amount, because we paid tax on the $3,600 that I received. So that's already been taxed money. So now it's just a difference between that $3,600 and the $4,000 that I might get in US dollars. But determining fair market value is another area that is a little bit tricky, because there are different prices on different exchanges, and there are valuation fluctuations that occur throughout the day. So unless I have the exact moment in time that I sold this particular coin, call it X coin, and I know in US dollars what that was worth right at that moment, it's going to be hard for me to establish what that profit or loss might be. So what the IRS allows is you can use a method as long as you use the same method. In other words, let's say I use the Bitcoin low for every day. As long as I apply that same low throughout every transaction I do, then I'm going to be fine. It's a safe harbor is what they call that. Or if I say I'm going to pick the high and use that across everything. The thing that you can't do is you can't say, well, I'm going to take the high side on my purchases and the low side on my sales.
I see.
See what I mean?
Right.
So you have to be consistent with whatever method you choose. And as long as you stay with that, you're going to be safe. But if you try to do it the other way, which I just explained, don't. That will not work out well.
I get it. Let's see. What about claiming from faucets? That's basically given to you for free. That would be considered income.
That is correct.
Yes.
Yes.
Let's see. I imagine I would, but not sure how that would be recorded. Also, what would be recommended online tax service? I would not use an online tax service. Now, remember, guys, a couple of years ago, I had actually interviewed somebody from an online tax service, and they were basically offering to do my taxes, all my taxes for free for having them on. And I still used Elliot. just so everybody understands, like, I still used Elliot, and I paid Elliot. So, and
I appreciate that.
Yeah. And just so everybody knows, he's not giving me squat to have him on here right now. So, I'm having Elliot on here because I trust him more than pretty much anyone else. And now you're available for everybody. Like, technically, everybody in chat right now could call you or email you, and you could work with them, right? Like, this isn't like
absolutely.
a state or city
I have
type
clients
thing.
all over the world.
You have clients all over the world.
Yes.
Okay.
Yes, and we work remotely, obviously, in some cases, where clients upload their information to me. Certainly, if they're local, we can have a face-to-face meeting. We can meet over Skype or whatever else works for them. And then the information goes into my secure portal, and I process the information, and then we talk about any questions or issues that they may have, or questions that I have, to finalize the return. And then we send out an e-signature form for signing the return, and then we electronically file it. Now, this year, we're going to be adding some services where we'll be able to collect the cryptocurrency data and parse through that to match up what capital gains should exist. If they do that, it's going to save money because we're not having to. But if we need to do that, we'll have the capability.
That's sweet. So basically, it's kind of a call you, set it and forget it, and then just wait and find out what the damage is.
Information. Yeah, I mean, there'll be a back and forth, obviously, in trying to make sure we have all the information we need. And when doing the tax return, I mean, crypto is just one element of a tax return, but a person may also have rental property, run a business. I mean, so
there's a lot more to it than just crypto, right?
Right. Yeah. I mean, that's just one piece of the puzzle. That's like if you had a stock brokerage account and came to me at the end of the year with your 1099, I'd work with that. Plus, I'd be working with your W-2s or Schedule C if you're sole proprietor, or if you have a S corp or an LLC or something.
Right, and I want to make it known too. So, I think a lot of people are worried because let's say they were doing really well in 2018 or starting, heading into 2018. And then of course the market crashed and, they're thinking, well, maybe I made a bunch of money, but now the market is terrible. I'm not making as much money. How do I pay my tax bill? And the reality is you're not having to pay it all in one lump sum. Right? Like you can schedule it out in payments and such.
Well, you're not actually making any money until you close out a position.
Right.
So if I owned Bitcoin and I owned it, I bought it at 5,000 and it went up to 15,000 and then went back down to 3,000. Okay. Nothing taxable has taken place as long as I've just held that as Bitcoin. And in fact, if I were to sell it at 3,000, at that point I would have a $2,000 loss. So it's really only once that taxable event takes place that I need to be concerned about paying taxes. Now, if I am doing a lot of trading where I'm seeing gains, gains can be offset by losses. So if I have losses that I've harvested from one year and I was not able to use up completely, those carry forward to the following year, and I can use those to offset any gains I might have in the next year first. So let's say I had $10,000 worth of losses in 2017, and I was only able to use 3,000 of the 10. I now have $7,000 of loss that is suspended. It's just out there waiting to be used. So in 2018, if I have a gain, I can first use up the remainder of that $7,000 against that. And I can do that each year until that $7,000 is used up completely.
And does that continue to grow each year? You have losses carried on to the next, kind of like rollover minutes?
Well, yeah. So let's say I have that 7,000 that I carried forward, and then I had more transactions in 2018 that generated another loss, and that generated a $4,000 loss. Now I have $11,000. Well, I'm allowed to use 3,000 a year to the negative. So I'm now going to have 11 minus the 3 I'm going to use. So I'll have 8,000 left to carry forward.
So what about people that, so let's say I bought Bitcoin at $10,000, right? And the market's crashed, but maybe I do pretty well in my day job, right? Like let's say I make $100,000 a year in my day job. I bought Bitcoin at 10,000, and then at the end of the year, or towards the end of the year, Bitcoin fell to $4,000. So I'm at a $6,000 per coin loss. What if I were to just sell my Bitcoin right before taxes at a loss, and then just buy it back the previous year? Like, is that screwing me or is that helping me?
Yeah, that's going to only help to the tune of $3,000, because I think I see where you're going, which is, hey, what if I could take that loss and then wipe out all my other income?
Right,
and pay no tax, and then just buy it right back, which might be considered a wash sale, but that's a whole nother.
Oh, is it? I'm not doing that. It just popped in my head, and I'm thinking.
let's say I waited a week and and bought it back. The problem with that is going to be that the loss is going to be, that's where that 3,000 limitation comes in. So I can only go negative $3,000. So if I have a $10,000 loss,
that's negative 3,000 per trade?
No, per year.
Per year. You can only claim $3,000 in losses in a year?
Well, let me make sure I'm clear on this. I can claim as many losses as I have against any gains that I have. So if I have $50,000 in gains and I have $60,000 in losses, I can claim 50,000 of those gains are wiped out.
Okay.
You follow that? So now I have 10,000 left. Of that 10,000, I'm only allowed to go -3. So that's where that leftover is going to come into play.
I see.
So capital gains are only usable, or capital losses are only usable against capital gains, not against my wages.
Ah.
Okay, that's
Okay.
the difference there. Yeah.
Okay.
So yeah, otherwise everybody, yeah, that'd be a nice play there, but no, that won't work.
Okay, so maybe this was answered, but I just got in. Are you taxed if you never change crypto to fiat after the initial fiat to crypto? So basically, if you just bought Bitcoin and then just held it and sat on it, you never touched it for
no
a year,
taxable
2
event
years.
has occurred. Yeah, it's not until you go out of that transaction that the taxable event takes place.
Okay, gotcha.
And that's either by buying another coin, spending it, or converting it back to US dollars.
Okay. Todd 6E says, excuse me, if I have 200 trades on one site, do I have to list every transaction separately, or can I do a consolidation and say, this is my total loss gain, and put buy sell date as it is throughout the year?
Well, you need to attach a detailed analysis of how you arrived at the gain.
Right. So you can consolidate it at the end, but then you have to support it with the actual
you're going to
information.
have to have an accounting of it. There is Form 8949 as part of the return, where you're supposed to record and report the transactions. Yeah, there is a way to do it the way he describes. You just have to make sure that you include the proper documentation.
Okay. Also, we'd like to know about airdrops or coins that pay out dividends hourly. How is that taxed?
Well,
that is a tricky one.
So airdrops are definitely considered
income,
taxable income. Okay, the one that's a little bit more up in the air is a fork. So some would argue that in a fork, if I received other currency, that all of it's taxable. Some are looking at it as though it would be, say, a stock split might be, where I owned 100 shares of Procter & Gamble, it's split, and now I own 200 shares of Procter & Gamble. But the price is half, so I didn't really gain anything there. But what if Procter & Gamble gave me a dividend in stock? So let's say they, and I don't want to confuse the two, but so instead of paying me in cash, they paid me a dividend in stock. Well, that's taxable as income. So in a fork, the question is my cost basis, if I bought Bitcoin, for example, let's say I put $100 in Bitcoin, and when it split to BitCash, okay, did my $100 cost basis now become split between Bitcoin and BitCash? Or does that $100 stay with the Bitcoin, and then all the BitCash was considered taxable as income? And so the argument for one method versus the other makes a difference in the taxes at that moment in time. Because if I'm having to pay taxes on all the BitCash I got when that did that, that's a taxable event. But if I was allowed to just treat that as a dividend split and just transfer a portion of my basis, if I did it that way, then I don't have a taxable event right at that moment. And so at this particular point in time, the guidance on that from the IRS is not clear enough to say that one method is definitively the way to go over
Okay.
the other.
How about self-directed IRAs?
Okay, so the nice thing about putting money in an IRA is it eliminates the need for all of that tracking, because with an IRA, it's only taxed when I take money out. So if I put in $100,000 into my IRA account over time, when I withdraw that money, whatever that is grown to, if it's grown to $150,000, whatever I take out, I may only take out $10,000 one year. I pay tax on the $10,000. So instead of having to track capital gains or losses, when you have an IRA, you don't have to do that because it's strictly money in and money out. So it is a lot easier for tracking purposes. But keep in mind, there are rules involved in when you can take money out of an IRA without a penalty and so forth.
Okay. Somebody just paid $5 to ask a question, but I have a feeling they're down lower. I'll get to them. Hey, Crow, if crypto is eventually classified as a commodity, are we still subject to capital gains tax, same as securities?
Yes.
They're going to get it no matter what the hell you want to call it.
If you buy something for more than what you paid for it, they will tax it.
Right. You know, I've always wondered, if you started with $1,000 and then at income, how long does it take for that $1,000 to spiral into nothing after all of the ways it's taxed?
Well, pretty easily when you figure everything that you purchase is taxed.
Right.
You go to the gas station, pay tax. You go buy, stuff that, anywhere you go, there's more different kinds of taxes, not just income tax.
Right. There's a million taxes. That's why I don't understand how we have a deficit at all. Like, everything floats to the top. It's like the mob guys that ran the casinos. It's like, all the money rises to the top in one way, shape, or form.
Well, part of the problem is that we're carrying such a large debt, and we have to pay interest on that debt. Of course, as interest rates go up, so does the debt payment. Mm-hmm. So that means more of the budget has to go pay just the interest on the debt as a country that we have.
Nobody's paying any of that debt. No, there's no money's going into
the government's paying interest on the debt. They're not paying the debt.
Oh, yeah, right. Okay, I was going to say, because that number's not going down itself, ever.
The only time that happens is when there's a budget surplus, and then it can be used to apply toward reducing the national debt. So budget debt and national debt are two different things.
This guy, Nasty J, is saying, my 1099 had 1.1 million on it from CoinBase, but I only have a couple Bitcoin, and I definitely lost some money this year, so I'm freaking out.
Right, I understand that. And that is because that is not taking into consideration what your cost basis was for the transactions that you made. So that's where, for example, people will do their tax return. They've sold stock, and the brokerage sends a 1099-B that says you sold $50,000 worth of P&G stock, and you forgot to report that on your return. And so the IRS sends out a letter, says, well, you have $50,000 worth of capital gain that you didn't report on your tax return, because we have this form from your brokerage that says you sold $50,000 of stock. Well, what it doesn't have on there, well, some of them do have this now. It doesn't have the cost basis. It doesn't say that of that $50,000 worth of stock, maybe you paid $60,000 for it, in which case you have a $10,000 loss, or maybe you paid $45,000 for it. So it's really only half the information. It's just the entity telling you this is what you sold. Now you need to go figure out what your cost basis of all those sales were to see if you did have a gain or did have a loss.
Can we claim crypto losses deductions if a trade from a coin to another coin when the value of overall crypto has decreased? Does that make sense to you? Basically, can you claim? I'm assuming can we claim crypto losses deductions if a trade from a coin to another coin became lower? I'm guessing. So, like, if I bought Bitcoin with Ethereum and then Bitcoin's value dropped lower than the Ethereum I purchased it with, I'm thinking that's what he's trying to say.
Okay.
Can you claim the difference as a loss instead of a capital gain?
Only if you close out of that second transaction
at a loss.
Right. It's only when if you're still holding it, you haven't lost anything until you close that transaction.
And I'm glad you said that, because I say that to everybody all the time. People are like, oh, I bought into this project and it's down so much. The entire cryptocurrency market is down, but you only lose when you sell at a loss. If it goes back up, then you will get gains. But so technically, if I bought, let's say I bought Bitcoin at $5,000 and I used that Bitcoin to then buy Ethereum, but Ethereum dropped 90%. If I haven't sold it, but then it goes back up to where it was when I bought it, I haven't lost or gained anything, right? So
not until you close out that transaction.
Not until you sell it. You sell it
right.
back.
Now,
into
the first transaction, the Bitcoin to Ethereum, that was a beginning and an end.
Gotcha.
Right. That first part, but the second part is still open. So viewing it as an open transaction until it's sold. I mean, a good example was in 2008 when the stock market dropped from 16,000 to 6,000. That's just the Dow Jones. Okay, so $10,000 worth of loss. Well, if you held those stocks and didn't do a thing with them, just held on to them, those stocks are now in the 20,000s. So you didn't lose anything until you sell. It's like, and the thing about that is, I liken it to getting off an elevator when it's at the bottom floor. If you owned stock in 2008 and the market dropped and you decided, I'm going to get off the elevator here, and the elevator starts to go back up, but you're going to take the stairs back up, it's going to take you forever, where, just 8 years later, or 10 years later, where, it's 12,000 more than it was in 2008, the Dow Jones in particular. Talk about.
As a follow-up, if I trade from the second coin to another coin, can I claim the loss? I thought coin-to-coin trades are taxable. They are taxable events.
Yes.
So basically, I think some of the confusion is if I have $100 in Bitcoin, I buy $100 worth of Ethereum, and then that $100 worth of Ethereum becomes $150. So you're basically, the taxable event is from the Bitcoin to Ethereum, but there's been no gain or loss yet. The difference that you are taxed on for capital gains is the $50 difference in the increase of Ethereum that you bought with the Bitcoin, right? In other words, I'm taking my fiat to Bitcoin at $100 or $100 worth of Bitcoin.
All right, so my basis is now $100.
My basis is $100. Then I'm taking that from Bitcoin to Ethereum, still
okay,
$100.
Okay, well, wait a second. That's still a taxable event. But it's a wash.
It's a wash, right?
Okay, it's zero gain because it's the same $100.
Exactly. But then the Ethereum goes up $50, so that $100 becomes $150, But
hang on a second. Did I sell all of my Bitcoin? So this is where it gets a little bit more difficult when you're getting into the how much Bitcoin did I get with that $100. And did I sell an equal amount of Bitcoin to get that 100 over to Ethereum? So when we're saying it's $100, so I will have to have no Bitcoin left. So if I bought Bitcoin for $100, and when I decided to go to Ethereum, what I had was my whole Bitcoin portfolio was still worth $100, and I put it all over to Ethereum, then I have no gain. But let's say I bought Bitcoin at $100, but it went up to 200 US dollars. And I decided to take 100 out of my Bitcoin and buy Ethereum.
Right. That would be a capital gains of $100.
On that 100, yes, because I still have Bitcoin that I'm carrying. There's no gain yet on that. No taxable gain that I'm having to report. But that first 100, that potentially has a gain. Yes.
So for those, there are 163 people watching right now. For these 163 people, which is actually a lot for a live interview. Most people don't tune into live interviews live. Like if I do something else, I'll have hundreds of people on here. So consider yourself royalty in that sense. In this bear market where the numbers are low everywhere across the board, to have that many people on for a live interview is very, very good, especially because nobody's being incentivized to be in this chat. So you don't understand that, but it's a very good thing that there are so many people interested. So let's treat these guys with some things. What can a crypto investor or a crypto trader, whether they're bot trading, they're what sorts of things can people do to offset some of the gains or the capital gains? Like what are obviously legal, of course, but like what can be done to try and alleviate some of the anxiety? Because a lot of people, they like myself included, I'm like nervous about my 2018 tax bill because I did very well towards the middle of the year based off of what I had done in 2017, right? So it's like I made it. I had a lot of stuff going on in 2017 that I didn't cash out until 2018, but 2018 I didn't make squat, right? But I did because I cashed some stuff out to live and to do what I'm doing, right? But I still don't have a big income. And so I'm thinking, holy cow, I'm going to have this huge tax bill and no real income right now. What the hell am I going to do?
Well, I think that part of the problem that you're really pointing out is that because of the limited amount of gain and loss tracking that's available in terms of real time, not just what I'm holding, but in transactions that have taken place, it would probably be a good idea to utilize a tool of some kind so you can see where you stand, how much capital gain or loss do I have on a monthly basis, so that the end of the year comes and I'm not doing 12 months worth of calculation, only then to find out, here I'm stuck with a huge tax bill or not. But I mean, so doing that and using tools that allow you to keep up on that would be a helpful way to know where you stand throughout the year, as opposed to just at the end of the year. And that's one of the things that we've been working on. So
one of the things that I think is going to, I think my case in particular is I'm going to show a lot of income potentially prior to writing off everything that we've spent. But then my capital gains is actually, I think I'm probably going to show some losses because a lot of the Bitcoin that I had made at the time went down by the time I cashed some of it out. So, I may see how that should offset some of my other stuff.
Yeah. So there's, again, so a series of events that could have taken place in anybody's scenario, which might apply. So let's say for myself, somebody pays me in Bitcoin. A lot of people pay me, let's say, in Bitcoin. And so I've had to claim that as income. So I'm already taxed on that. But now it's sitting in my account as Bitcoin, and then I decide to cash it out. Well, depending upon what the valuation was when I got it, that's what's going to determine when I sell whether I've got a gain or a loss on that. And so I may have been taxed on $100,000 worth of Bitcoin, but the market dropped and now it's worth 50. So I'm going to have a $50,000 loss because I've already been taxed on 100. That's a split scenario showing I'm being paid in Bitcoin. That's one thing. and then I'm investing Bitcoin, that's another thing. But if I'm just buying Bitcoin, buying and selling, then each one of those transactions is potentially a gain or a loss. And the more you do that, the more transactions there are, the harder it is to know where that is, unless you're using some kind of tool to keep track of those transactions.
This tool, I feel like you're alluding to a tool that you have. Is this a service that you sell, or is this like what is this?
I'm in the process of talking with a company that is putting something together that investors in cryptocurrency really need, and we're in the final stages of it.
Are you like investing in the development of this as a
I'm
platform?
investing in the development of it. I will be a wholesaler of it if they can get it to do what it needs to do.
Okay.
So
we'll
I'll
keep
make
it posted on that.
Yeah. So I absolutely will let you know when that's available. But we're hoping here in the next few weeks that it's going to be up and running, so that we can just collect the data through various methods right out of exchanges and wallets.
What about like bot trading APIs, things like that?
Yeah, as long as that is accessible, I'll have a list of what exchanges and wallets will be available, in terms of where it can connect directly to get the information. It is also available with manual entry, and also with a CSV file. So if you have a service that you use that you can export the data as a CSV file, and then we'll be able to import that as well.
You know what would be like an incredible app to have, honestly, is basically what you're talking about. Like something that, even if it were just something running on my desktop, and I plugged in APIs to the different exchanges,
right?
And I'm bot trading, but it just kept a running tally of my gains, my losses, and where I'm at, just consistently as the market changes. That would be stupid as a tool.
Well, and you're right. Well, right now we're just trying to deal with the tax implications, but I think what you're looking for is definitely on the horizon, and it's needed, because you've got different exchanges, you've got being able to aggregate that information so you can see it all in one place. I mean, those tools exist already for stock brokerage accounts. So if I have 6 different brokerage accounts, I can merge all that information online for that, but it's not quite there yet for cryptocurrency.
We need to get a tool like that. Maybe someday, if nobody else does, I'll develop it. But just a nice little dashboard interface, man, tells you everything into the year. You click export, and it sends everything off, all figured out for your tax guy.
Right.
Cointracking.com, there you have it. I've used Cointracking, and it has been helpful in the past, but it's not entirely accurate. The first time I ran Cointracking, I was kind of shocked at how inaccurate. There are a lot of things on there that I'm like, this isn't accurate. Now, I don't know what's changed in the past year. It's been over a year since I've used that site, but I'm curious to see what Elliot's got brewing. All right, yes, and be able to integrate it with, say, Aquitas bot right now. Yeah, I love my Aquitas bot, and I want to be able to track that more effectively for tax purposes. How would the capital gains work if you didn't pay taxes all year? Well, I don't understand. You're not paying taxes all year. All
right. So in a typical year, taxes are due on a quarterly basis. So if you wait to the end of the year to pay taxes, there is the possibility for an underpayment penalty, because the government runs on a pay-as-you-go basis. So that means that at the end of the first quarter, if I know I have
example, Adam was deployed in the military, so he couldn't do anything.
Right. Okay. So if at the end of the year he had gains and that goes on his tax return, then depending upon how much those gains are and how much tax he ends up owing on that, he may be able to avoid a penalty based upon his other withholdings. But if at the end of the year you owe $100,000 of tax just from your crypto trading, then there's probably going to be a penalty unless you've paid a good portion of it. Now, this year in particular, there are some additional benefits that are waiving penalty because of the change in the tax code in the last year. So, but generally speaking, in a normal year, you would pay estimated taxes on a quarterly basis if you were having substantial gains. And the challenge with that is that at the end of the year, the first half I did great, the second half I didn't in my trading, and it ends up a wash. Well, then I may have paid too much in taxes, which I would get back. But it's a question of whether or not I want to risk paying the penalty at the end of the year, which is not terribly high, but it just depends on how much you owe. So and taxes are due on April 15th, whether you file an extension or not, taxes are due then. So if you file an extension, you want to pay something toward taxes, and then you can file your return sometime between April and October.
If you only have losses, do you even bother with crypto tax? Yes. Right? I mean, you want to claim the losses to help you for the next year.
Well, yeah, you definitely want to capture those so that you've got them, and then you can use the $3,000 this year, and then whatever's unused you can carry forward until you use it up. I mean, let's say you had $25,000 carried forward. If you should have a $25,000 gain, all of that would be tax-free because you've got those $25,000 in losses that you've carried forward.
Oh, there you go. So I'm being selfish. It's January 29th. I assume we need to get you everything for 2018 so that you can file my stuff.
Soon. Yeah. Well, the IRS just opened for business yesterday.
Oh, okay. So I've got 6 months.
Yeah. So it's yeah. So really, tax season is just starting to go into full swing.
Oh, okay. But so now is the time to start getting all that stuff filtered through QuickBooks and all of that. So just for people that are curious, so that maybe there are people that they have a few different businesses. They're drawing income here. They're making losses here. Maybe they have an S Corp, an LLC, and then a W-2 job, and then crypto income. And they're like, oh my God, this is all so confusing. I think I'm going to go to H&R Block, or I'm going to go to this little tax place in a plaza next to Pizza Hut. Is that okay? Or should they have somebody now? And I feel you're going to be pretty straight up. I mean, obviously, if somebody can afford someone like you, which it's really not, I mean, yes, it's expensive, but it's really not compared to somebody screwing up your taxes. And I guess what I'm trying to say is, at what point do you start looking away from the little plaza one-stop shop tax places and you call somebody like yourself? Is there kind of a place in life or a place in business that somebody should start going to you as opposed to just going to the place that claims that they're not going to charge you for your tax returns or whatever? You know what I'm saying?
Well, if the only way they're not going to charge you for tax return is if you have an extremely simple tax return, for example, just a W-2, and that's it. And then they will charge for the state. But if you've got those complex issues that you just talked about, which would include rental property, capital gains from cryptocurrency, capital gains from stocks, you've got an S corporation. If you've got all of those issues, I don't think you're going to be well served by that.
A template
operator, a mall tax preparer, generally speaking.
A mall tax preparer.
And I think the other thing is that the clients build a relationship with me, so that we have years and years and years of seeing the same person. And so a lot of times when you go to some of those other places, every year it's a different person, and so you're having to reestablish what you've got going on in your life, where we can pick up where we left off and discuss changes. It makes it a lot easier. And then pricing wise, actually, I've seen clients come to me after going to H&R Block and they've paid just as much there. So it's not really all that inexpensive. I mean, free is great, but that only applies to a certain limited few who have a very, very simple situation. But pricing wise, you know, depending upon, I mean, if you have 100 rental properties, you're going to pay more to have your taxes done than somebody that owns one rental property.
Mm-hmm. Right.
You know, because there's that much more work involved.
Right.
So if you have a Schedule C for sole proprietorship, well, you know, depending upon, you know, if you do $1 million in business and carry inventory and, you know, things like that, or if you're just a small mom and pop place, you know, it's going to be less expensive to prepare a return. So, and my work is based upon the forms and schedules that we need to use. So the more complex the return, the more expensive it becomes. But average price wise, just to give you an idea, I mean, I've done returns for $150 or $200 because they're you know, at the lower end, but average is probably around $350. Now, once you start getting into analysis of cryptocurrency, you're now, depending upon the number of transactions, you could be looking at more like $1,000 or a couple of $1,000s to parse through that data.
Could Elliot explain the Tax Forgiveness Act? I am in big debt with the Fed. LOL. $250,000.
Well, I think they're talking about the Offer and Compromise program. And the way that works is that under a certain set of circumstances, you have to apply for with the IRS to make an offer and compromise, to say, I owe you this much. I can afford to pay you $10,000, let's say, by example. And there's a lengthy process that you have to go through in order to accomplish that. And they do look at some things like, how old are you? What's the likelihood that you're going to have substantial income in the future? So that is, in the next 10 years, is there a chance that you're going to be able to pay that $250,000?
So if they see you're in crypto, they're not going to let you do squat.
Yeah, and they do look at your assets, and they see, you know, if you got all these assets. Yeah, so you really have to be in a situation where you have nothing and you're scraping together whatever you can afford to offer.
Because if you have assets, they're going to tell you to sell them and pay us.
Right, exactly. Yeah. They're not going to just knock it down to zero because they don't work that way.
Of course not. It's the IRS. They'll just tell you, kill yourself. Kill yourself. Cash-headed life insurance. Give us our money.
Don't do that.
Don't do that. Don't do that. I'm just making it funny.
You know what? You work out an extended payment plan, and then you can also, if you don't have the income and you're on a payment plan, you can have that put on hold as well. But here again, any of these things require that you thoroughly document your situation with the IRS.
Yeah.
The best thing is to communicate with them, because if you don't, it just gets worse.
Yeah.
And then it really gets out of hand.
Yeah. Yeah. I mean, you know, I feel like, and I could be wrong, but I feel like people talk about like SEC and regulation and IRS and how evil they are, and everybody's evil, just trying to screw the little guy. And I'm thinking, you know, the more I learn about a lot of this stuff, the more I feel like if you are transparent and you're doing everything you can and you're just upfront and you're honest, I feel like you'll find a lot of people willing to work with you. But as soon as you start trying to cut corners and you know, like I've had a lot of conversations recently about FCC and regulations, and that's not even tax related, so we won't go down that rabbit hole. But I can't help but believe that, like, you know, if you're playing by the book and you're building relationships and you're trying to be transparent and do the right thing as it's being laid out, even if it changes, you should be fine. But maybe I'm naive. I don't know.
No, that certainly helps.
Yeah.
I mean, even going through an audit that way helps. If you start out with an attitude, it will not work out well.
Right. Yeah. Regardless of, just because people say we're free, we're really not. And I'm very well aware of that. I do not feel free whatsoever as an American. But I mean, granted, we're still in a much, much better position than 90% of the rest of the world. And so it's just the way things are. And they're,
Well, if you can demonstrate that you've made a good faith effort to do the right thing, I think you'll find that there's more willingness to help solve a problem than if you didn't.
I just got here. I've been freaking out about how to pay crypto taxes. I received $10.99 from CoinBase saying I traded over 60,000. I make half of this in my income, so that means total volume. Without the Jay Myers, so everybody that has very, very specific questions, what I would suggest doing is Elliot is available to work with anybody worldwide. I mean, he can take on clients from anywhere in the world. And his phone number and extension is right here, and his email address, it's ekravitz@emcfinancialonline.com. He is more than happy to help work with, I'm sure, any of you guys that have specific situations. We've been on for an hour. I feel we've explained most of it. I think anybody that's just tuning in now, start from the beginning, watch the whole thing through. I think we've addressed a lot of questions, and a lot of how this stuff works. Would you agree? I mean, is there anything else that you feel we've missed or we should cover before we finish up?
I think we really have covered much of what I outlined for myself. So I think we really did a good job of covering the topics that I think highlight all the different areas. We can certainly do this again with perhaps an update on the some of the software that will be available, and or with other specific questions, we can try and do it that way as well.
The one last question I'll ask, and then we'll wrap up, so you can get back to your day. I know you're busy. The FBAR, people are concerned because Binance is one of the largest exchanges by volume out there, even though I feel like a lot of that volume is probably BS. But Binance is one of the largest exchanges out there, and they're based in Malta, if I'm not mistaken. So basically, anybody that transfers over $10,000 worth of crypto, let's say I want to do some trading, and I've got $12,000 worth of Bitcoin that I'm going to send to Binance. I at that point am expected to file this FBAR. Is this something that an individual is doing on their own, or is this something that you call your tax guy and say, hey, I just sent $12,000 to this overseas exchange, I need to file that FBAR you were talking about? How does that actually work?
Well, the FBAR is due once a year. So if you have $10,000 in an overseas account somewhere, you can fill out that form yourself. You can have your tax preparer fill out that form as long as you provided the information on the existence of those accounts. Part of what the program that we're working on here is knowing what exchanges are in what countries. We should be able to tell you what accounts or what amounts you have in those accounts that are subject to an FBAR, and then have this system prepare an FBAR for you. So that would be ideal, because what you're really looking at is the notion that everyone knows where each of the accounts are held. And if you're not sure, you should check. But there's a good chance that because there's so many overseas exchanges that and depending upon how much money you have in them, that you would be subject to filing the FBAR.
Let's say, hypothetically, 2016, 2017, you had a few Bitcoin on Binance and you were trading it, but then you cashed that out, sent it to CoinBase, and then you claimed everything on your taxes, properly on Coinbase, but you didn't file some FBAR because you didn't know it existed, you didn't know anything. Can you get in trouble for that? I mean, what's someone to do at this point?
Well, theoretically, the answer to that is yes, it could be. Realistically speaking, the likelihood may not be as great because the system is not in place where there's reporting by these exchanges to the U.S. government. So if there was a 1099 generated by some location, that would certainly make it easier for them to track down. It's your responsibility and to report all income and all assets. And so if you don't do that, you always run the risk of them somehow, some way, someday coming back and saying, hey, what about this? Certainly oversights happen. Again, there is a threshold for how much money you have to have overseas. But I would say that if you're doing a substantial amount of trading, I would probably look into filing for certain.
Okay. I mean, that's fair enough. I'm just I know that there are people who, they bought into Bitcoin in 2013 and they had a bunch of it sitting on Binance and nobody's ever heard of an FBAR. You know what I mean? Like, right. There are a lot of big players out there that I'm sure are not filing these things. So I just thought that might be a question because it looks like I've had a few questions about the FBAR come up since we first mentioned it. Okay. So look, on that note, everybody, I appreciate you joining us. Hopefully this was helpful, educational. Elliot is, of course, he's available. Tax season's getting started. Tax season just opened. So it's going to be like shooting deer for the IRS this year. And Elliot is here to help everybody that needs it in any way you need it. Phone number 513-229-0086, extension 202. Email address, or just go to EMC Financial online. This is not a paid ad. He has not paid me anything to be here. I'm just basically trying to spread the wealth, share the wealth of knowledge and experience that this gentleman has with all of you. So thanks for joining us, Elliot. I really appreciate it.
Thank you. I appreciate the opportunity.
We'll definitely have you again on in the future. Anytime anything changes, if new laws pass, anything new in the tax code or whatever passes, something happens, changes, let me know. We'll bring you back on to talk all about it, okay?
Okay, that sounds great.
All right. Crow your coins, ladies and gentlemen. We'll see you again real soon. Have a good night.